Hello and welcome to Wisdom Workshop. Please like the video and subscribe with all notifications turned on. To put it another way, whether you're now anxious about your career, your business, or anything else, what does the future hold? And for that reason, this is arguably the most crucial program. See, the majority of people only follow the stock market. They don't have a lot of information about housing costs in their area, which is unacceptable. What kind of future does George Gammon envision? What does he truly want to emphasize to the audience is that even just beginning to comprehend the macroeconomic picture doesn't have to be difficult. The reason you think it's complicated is because economists and academics use so much jargon and technical phrases, but if you simply translate it into basic English, it's actually extremely simple for people to comprehend, and if they understand it, they'll be able to make much better financial decisions for themselves and their families in the future. Therefore, whether George or anybody else is offering you advice, be sure to make an effort to pay close attention to what's happening. Let's say you've been diligently saving money, working hard, and acting morally. You have a small nest egg saved up, you go to the bank, and you're like, oh my gosh, they're only giving me 0.5% interest, or 0, or who knows what it is. You can't even see the interest rate because it's so small these days. You respond by asking, okay, where can I go to obtain a little bit greater rate of return while still wanting to be secure? It has to be safe. Then you could choose a product like a money market mutual fund or a money market fund thinking, well, that's secure, all my friends are doing it, it's like a bank account, but I only get maybe a 1.5% return. However, the ordinary individual is assuming exponentially more risk only to earn that 1% higher return, which they're unaware of. Then how is that? Because the money market mutual fund invests your hard-earned savings and money in the repurchase agreement or repo market or the commercial paper market, which is essentially corporate funding of the same kind. This is how the money market mutual fund earns the additional return. Then the question is, does that person really want to lend their hard-earned savings to Dutch Bank, HSBC, or some of these other banks that may be in danger of failing right now while they're watching Monday Night Football and enjoying life with a white picket fence, 2 kids, and golden retriever? They don't care about the plumbing, they don't care about dollar swaps, or to put it another way, would that person want their money being given to American Airlines or Boeing right now when every time you turn on CNBC or the TV, you see that they're pleading for another bailout because they're ready to go bankrupt? That is just one example of how this macro, the financial flow, and the plumbing may impact the average person. What does it imply, therefore, that the banks are currently failing? Because these debt cycles last for 75 to 100 years, it affects not just the banks but also the government, the private sector, and our whole economy. We're currently at the peak of a 75 to 100 years long debt cycle, thus the only direction we can go is down. Nonetheless, when one of these debt cycles reaches its peak, the only thing the government can do is select one of 4 possible solutions. First, they may choose austerity, which is merely tightening the belt and spending less, consider the deflation or depression of the 1930s. Or, they restructure the debt. However, it's unlikely that we would do so with China or the large banks because they're the creditors. Alternatively, they may just say, hey, we're not paying you, or most governments opt to print money instead. Inflation is being created in order to save everyone with debt, whether it be individuals or governments. What does this entail then for the common individual once debt reaches a particular level for the majority of governments? So, if the government is trying to inflate prices so that products and services become more expensive, you should make sure that you're prepared for it. So, for instance, if you just own your own property, you must ensure that you have a 30-year fixed-rate mortgage because if they attempt to inflate prices, your interest rate would increase unless it is fixed. And if you're a debtor, what occurs is that you'll have the chance to repay your loan and mortgage using less expensive, depreciated currency. This means that if they borrow, say, $100,000, the rate of interest means that they will be able to repay the bank with great buying power because the principal and interest are added together. Inflation, however, results in the borrower being able to repay the loan with less buying power. Therefore, if inflation rises to 6% but your interest rate is, say, 1% or 3%, the difference between the two represents a transfer of buying power from the bank to the individual homeowner and many of the listeners presumably have a mortgage. If not on their own house, then possibly on a rental property. This is the very first thing they can do to be proactive. You also often mention gold, silver, and Bitcoin. What does the economy's future hold given the effects of the COVID-19 lockdowns? From an economic perspective, the general public only needs to consider supply and demand to understand the entire economy. Therefore, the supply is determined by how many goods and services we create. Demand is determined by how much money we have, our desire to spend it, and our ability to obtain credit. Since most people are aware of the lockdown, demands for products and services is drastically down, and fewer individuals are actually making purchases depending on what state and city they reside in. That reduces the demand equation, which is what most people focus on. So they assume that deflation would result in prices falling, but they overlook the supply side of the equation since it will also fall quickly if people are unable to engage in the production of products and services. Thus, the question is, which is declining more quickly, supply or demand? Correspondingly, you should have a look at the supply chains that have been interrupted when entering the United States. The bulk of the items on the shelves at Walmart, Target, and Home Depot were made outside of the United States, hence, less supply would result from disruption of such supply chains. Then, using Raymond Thomas Dalio's example of long-term debt cycles, what often occurs is that you get social unrest. He hates to admit it, but if you look at history, that is the simple truth. Moreover, politicians often use helicopter money to quell societal unrest. Therefore, it doesn't matter what you want to name it, modern monetary theory, MMT, or universal basic income, UBI, because it essentially involves the government putting money into the actual economy and into the pockets of the regular person. In the future, it's possible that the Federal Reserve System will act in this manner. Despite the fact that they're now theoretically not permitted to do so, they've been violating all regulations. Therefore, if the ordinary person has more money in their pockets, there is more demand for the economy's non-debt-based goods and services, even though they're staying at home and not going to work. That's crucial because, contrary to popular belief, deflation and inflation are both quite complicated economic phenomena. Therefore, if there's less debt in the system, asset prices could decrease, including those of cars and other items that the majority of people purchase with debt. However, prices for most items that people purchase on a daily basis and don't require debt, such as groceries, typically increase. You may have seen on CNBC the other day that in many markets across the United States, food prices are up as much as 25%. In the real world, it has already begun. The meat packing companies are closing as a result of COVID-19 lockdowns. Meat is currently in limited supply, which is a prime example of supply declining more quickly than demand. However, the Federal Reserve System is injecting trillions of dollars into the economy. Since supply is declining and liquidity is increasing, the shelves are bare for American pork, beef, and other goods. He won't forget the Arab Spring when it occurred, but the true rioting wasn't about Islam or Christianity and all this. Because mom and pop couldn't afford to go to the store, the Arab Spring occurred. What George Gammon is saying is that when people are hungry or unable to purchase food, that is when the social condition worsens. Thank you so much for watching this video. Please like the video and subscribe with all notifications turned on so that you won't miss any of our upcoming videos that'll help you become wiser.